Hi guys, pardon I was late. It's 5:45 p.m. in the Philippines. Thanks for everyone who's watching. Today's title is Icahn, Carl Icahn purchasing February 21. That's Tuesday next week. 4,050 spy puts. Do Bears finally win? You'll notice that for this entire Feb, most of the data actually favored the bears, but the data and the market reaction was basically muted until last night. So, what data did the bears actually get? Well, you've got earnings of big techs, obviously bad. So, we saw that on February 2. We also saw data from the Feb 14 Valentine's Day CPI was bad. So CPI came in hot at 6.4%. PPI was also very hot. It came out last night. The jobs report on Feb 7 was also very hot. The economy is still relatively strong, which means that inflation can be controlled by hiking rates further, and therefore the market is actually getting a lot of news from Fed officials who are voting on March 22, 2023, about a potential 25 to 50 basis points hike coming on March. So anyway, let's actually discuss the market conditions today, and I'm going to share to you today's class, and I'm going to present. Okay, wait up, share my screen. We will I'll share this first. Okay. Okay. So of course, for those who are avid watchers, thank you for watching. I believe that some people are really looking forward to our free Friday classes. For that, thank you. Obviously, share a like and subscribe. Thank you. And share it to your friends. We want to, of course, say to everyone first that, today's topic is Icahn purchasing the Feb 21 4,050 puts. Do Bears finally win? And also, we get a quick recap on February 3's taking candies from babies. So, before I make a recap, I do have to say that all of our trades actually made money on the taking candies from babies episode. So, today's Feb 17, it's about 2 weeks after. Most of the expiries of that was February 10. Although some would be expiring on Feb 17, or some would expire Feb 24, I would show to you certain trades that are live, and those that we will plan to do for next week. So I'm gonna try to give you some that already happened and some that will continue to happen. Okay, so this was what happened last night. Obviously, it was a very good win for the Bears. You can see most of the big techs suffered a big drop. You've got all the chat GPT hypes like Microsoft, Nvidia falling, AMD falling 6%. Meta was down, Amazon was down, Tesla was down 6. It even went all the way down 8%. So you can see it was a huge amount, huge wave of red last night. A lot of bears finally won last night. You can see that in the S&P 500 from February 1 till February 17, there has been just chopping, chop, chop, chop. But obviously, we couldn't break 4-2. So far, the line of defense has always stayed at 4-1. Today, the first day, we're actually dropping below 4-1. We're actually opening in pre-markets at 4,058, which is significantly below 4-1. That is quite significant given that in the pre-markets, we have been seeing that it's pretty rare to see the pre-markets open gap down. So for the month of Feb, at the very least, it was something that usually gets bought up. Of course, the market hasn't opened yet in the US. This is just pre-markets. S&P 500 is dilly-dallying at the 4,050, 4,070. Maybe later it opens 4-1. So we can't really say much, except the fact that obviously what happened last night is very, very, it's a good incentive for the bears, okay? So let's see. We have to explain that for those who are mastering the selling of credit spreads. Or okay, so these are a few things that we would remind you. Um, in the episodes where we said take candies from babies, and also when I explained options like I'm five, you can check it out in Awesome 10x. Just search taking candies from babies, Awesome 10x. That was February 3. Explain options like I'm five. I think that was December 2022. Like I think I gave that as a class before Christmas, because I think that was a very, very important Christmas gift to all of our free members and all the Awesome 10x members. So basically, on selling credit spreads, the reason why we believe that this is such a highly rewarding and consistent strategy is that obviously when you are a seller of puts or seller of calls, you receive a premium outright, and the risk reward is firmly on your side if you choose the right strikes. So there are three things that you have to pay attention when you are selling credit spreads. It has nothing to do with the yields, it has to do with the strike price. So your strike price has to be high enough if you are selling calls. So it has to be high enough, but it should also be giving you a credit premium of at least 30 to 50% of the weight of the spread. So say for instance, you're talking about the SPY 420 425 bears, then that's a $5 spread. That means that you have to get 30% of 5 or at least 1.5 credit. 50% of 5 would be 2.5. Anything less, sometimes $1 we accept. It all depends on the expiry. So obviously, the shorter the expiry, you should aspire to get at least 1.5. And then if you're going for a long dated expiry, and we're talking about short dated as in 2 days, 9 days, 14 days, anything 2 weeks or less. Long dated, I'm looking mostly here on about 6 weeks, 8 weeks, around that format. So we're talking about 45 to 60 days here, and this one is about 0 to 14 days. Although technically speaking, making zero DTE sell credit spreads is gonna be very hard to get this type of credit premium. So realistically, you can get a credit of about 30% perhaps, but maybe it's not a zero DTE. I've done it successfully for a few times this week already. 2 days, 2 days to expiry, 3 days to expiry. So it's really, really short dated. But because the vega or the volatility or the high implied volatility is very, very high, we are in a high IV environment today, it makes sense to sell calls and receive your credit. So that means habitually, because we usually use about a $5 with spread, you should be receiving about $150 to $250 per contract. And that means that you are risking somewhere about $250 to $350 per contract as well. Now, the reason why when you're buying this, it's negative is because you're buying a negative price, meaning that you are receiving that money. Selling credit spreads is actually a multi-legged strategy. You're selling calls and you're buying calls. So say, for instance, it's SPY 420s. That means you're selling 420 calls, but you are buying 425 calls to cap your risk just in case the SPY shoots up to the moon. At the very least, you're going to be cap risk at $5 minus your credit received. So let's say you receive $2 credit. So 5 minus 2, max risk for that contract is $300. But do you actually risk $300 on that entire trade? Some people, they really hold until expiry if they're playing the short dated ones. Let's say you're doing a short dated expiry of about 2 days, 7 days, 9 days. Usually, I would say that selling these out of the money calls or these selling credit spreads, I usually hold it until expiry. Um, or if I don't, I usually already take a 90 to 100. Of course, it will only hit 100% on the final day. But sometimes a day before or 2 days before, if I'm already receiving 89, 90%, 95%, 94%, yeah, I do sometimes close it already. So yun, just remember that your input has to be a combination. This is a multi-legged strategy. You cannot do this in just a single leg. So you can't just sell a SPY call. So because if you sell a SPY 420 call, that would take about $42,000 from your margin. So, but if you do a combination, like sell SPY 420 call, buy SPY 425 call, this spread will only cost $500 in your account. So really, the reason why we love doing these credit spreads between 0 to 2 weeks, generally speaking, is because you have a very little outlay. Your initial capital, even if you just have $1,000, you can already make these credit spreads, one contract, you can do it. Plus, you can do it even on the most liquid instruments, say Apple, Nvidia, Microsoft, Tesla, SPY, Qs. It's all applicable, and you don't need thousands of dollars to just to do that. So you can see that this one is a SPY February 17. So it's going to expire tonight, 4/20/425. So tonight is a very important night. We always told you guys that Feb 17 is important because this is an options expiry day. All of the options in stocks expire on a Friday. So if you're talking about Nvidia, Apple, Tesla, Estee Lauder, all of these are gonna expire on a Friday, whereas your spies are 0 DTEs. So technically they expire Monday, Tuesday, Wednesday, Thursday, or Friday. But we usually choose, guys, Fridays because the third and the fourth week Fridays, the third week Fridays and the fourth week Fridays are most important because well, technically speaking, a lot of the options market makers would have to be starting to close all of their positions. And end of the month is also very important, which is next week, Feb 24. That's the reason why if the market is going to choose a decision point, it's going to actually happen on Feb 17 till Feb 24. So actually, Carl Icahn is doing a Feb 17 and a Feb 21 bear put. That is a very directional bearish bet. You'll notice that all of these spreads are not necessarily directional bearish. They're bearish, but actually mild. What do I mean with being a mild bear? Because for SPY bear here, all that SPY has to do is stay below 420. And you can clearly see that SPY today is trading already at 4,060. So definitely, like, you've got a really, really high probability to win, right? So very clearly, we can see that this SPY bear is already actually 99%. I mean, that's almost book it. It's going to be 100% later. Now, this NVIDIA bear spread, which is, I think I did this February 24. I tweeted about this NVIDIA bear spread specifically on I think I did this on Feb 15. I think I did this on Feb 15. So I said that I didn't want to trade during the CPI day, but I'd love to trade the day after CPI. That was really my experience because usually the market will show their true colors a few days after the data. So the data was actually hot. So definitely it was helpful for the bears. So I used the rallies of Nvidia trading at about 220s, 225s. You can see, let me show you the charts of Nvidia. Let me share. Wait, how do I screen share my, wait up. I'm gonna try to share charts. Entire screen. Okay. Okay, so I'm going to share to you my screen now. You could see that we initiated the NVIDIA bear spread at a high strike of 230. You'll notice that the peak of NVIDIA this week, you'll notice that very huge move here. This one, February 14 and February 15, right? So on Feb 14, it spiked. I only made the bear actually Feb 15. So there was a possibility that this 230 could proceed towards 240. So there was definitely high IV, high implied volatility. And I took advantage of that high IV to basically collect some credits. That's why for NVIDIA, this is actually 1 week, Feb 24, 230 to 35. And you'll also see that on April, I made the 260, 265 bear spread. So this actually, I did, this is roughly about 2 weeks, and this is roughly 2 months. So why do you make a short dated and a long dated? Okay, so obviously for a long dated expiry, this has a very, very high probability of being correct. Why? Because you're paying for a duration, right? But because it's very, very long, um, technically speaking, you can choose uh the same strike, 230 to 235, right? So you could get like something like $2 there. But instead, I actually wanted this to be more of a high probability trade. In order to favorably make high probability trades, there's two ways for you to do so. Sacrifice your credit, meaning you receive a small credit, in this case, it's just $1. But in return for sacrificing my credit, I get a very high strike, which is 260, and I get a very long duration, right? So it really depends on how you play. If you can see, this 260 box is practically almost a very, very low probability for Nvidia to even go as high as that. So even if Nvidia does well on earnings in Feb 22, even if the chat GPT hype upgrades continue further, it looks like there's several resistances, technically speaking, on Nvidia. So there's like a three-headed monster here at about 250s, 260s, 290s. And so I actually chose somewhere here at 260 bears for April, and then a near term here at 230 bears. Nowadays, because Nvidia is opening below 220, that's definitely comfortable. Yeah, that's a definite comfortable place to be in. Now, things can go up and down. If you want to follow this trade, for this April 260 265 bears, you can actually create, for those who are following these types of bear spreads, you can also create Nvidia bears, not necessarily on April. If you want, you can choose like March. Let me show to you how to do that. First and foremost, you just click Nvidia. I think Nvidia is still pretty in the expensive IV side, so expensive volatility side. That's why you can still take advantage of credits. So you can choose like example 35 days or this one 40 days. So I'll show to you example the March 24th. So March 24 is still giving in case you want the short. So there's two ways for you to sell calls. Do you want to sell at the money calls at 220, or do you want to sell an out of the money? So definitely we like to sell out of the money calls because it is a safer alternative. You can get to sell at the peak. The recent peak of Nvidia is about 230, so you can actually sell 230 and then buy the 235. You can see sell 1150 and buy 1035 would give you a net credit of about $1.15. So actually, we said that we usually want $1.50 or 30% of the $5 spread. So you can actually just post it, right? Like post sell 230, buy 235, then put it at negative 1.5, expiring March 24. So that's actually one trade that you can make anyway, because Nvidia is like moving up and down, and you can see from the chart of Nvidia that it's been very volatile. Okay. For those who are looking at my tweets, I talked about the two sock fishbowl bear strategy. Every time you see a lot of these spikes, obviously, like Nvidia has been running up for over a month now. Actually, since October, this went from 108 already double, and very, very and this is a very steep move considering this is a $500 billion company with a lot of the semiconductors all failing their earnings. So I'm not saying that Nvidia is supposed to be going down towards 200 or 190, but you can see that at 230s or 220s there is adequate premiums to receive here, and you can collect that credit even if it's 30 days, 2 weeks from now, or a week from now. You can even check, so example, you can check like Feb 24. So for Feb 24, if you make a bear spread on Nvidia at about 230, here you can see 555 and about 430. So you can see that's still $1.25. So I actually did, I believe I did the 230, 235. Yeah, I did this, the 230, 235. I got it at 150. I think, so yeah. Oh, sorry. I think this was Feb 17. That's why I'm up 90%. But if you want to create the Feb 24, which I just showed you today, This one is still actually good. 7 days from now, 555 minus 430, you can still receive about $1.25. So that's actually a highly consistent bearish spread strategy that I would also continue to make for an Nvidia bear spread expiring on next Friday. Yeah, so that's gonna be quite a good bear spread for those who wants to do some Nvidia bears. I think that the last remaining bear spreads to make that is still relatively high credit is actually Nvidia and Apple. I'm gonna show to you. So basically, Nvidia hasn't fully broken down, so there's still adequate rich premiums to take advantage here for Nvidia and also for Apple, guys. So Apple has been sleeping over the last 3 weeks now, so about 18 days, 17 days. Since February, Apple has just been steadily sleeping here from 148 to 157. Notice also from the 15-minute charts that the 155 and 156 has proven to be quite a significant resistance. So knowing that your 158 is quite a strong resistance, there's several ways to do this. You can handle it this way. So for Apple, you can actually short twofold. You can short the Apple 155 bears. So you can see that if you want to make a sell 0 DTE calls tonight, you still make about 50 cents. But I usually don't do 0 DTE. I'll be very honest. I usually do more of 7 days or 1 week or 2 weeks. So we'll take a look at the Feb 24 bear spreads for Apple. For Apple, we can check the 155 and 160. Yeah, this one is actually good, guys. The 155, 160 bears for Apple is still about $140. You can still get $140 to $150 for next week. This one I can actually create for Apple for next week. That would be a 7-day expiry, expiring Feb 24. Of course, for 14 days, you will receive more than $150 if you wish. You can do the 155, 160. You should be receiving something like $1.70, or maybe you can try $2. So those would actually be high probability payoffs, in my view, for Apple because it's a neutral strategy. You don't need Apple to crash. All you need is Apple to stay below 155 and you'll already make money. So every Friday, if example, last Friday, Apple closed at 149, so you won. This Friday, it looks like Apple's going to close 150 or 152. So you'll still win because your bear spread strikes is 155. So you should just pay attention to your strikes. As long as your strikes are significantly higher, well, not necessarily significantly, as long as it's higher, okay? As long as it's higher than the spot price, you automatically win that credit premium. So yeah. And we did this actually. Let me show to you a few examples. So we did this Nvidia bears. This is a naked sell call, 240. You can see that obviously it wins because this is a one. So I did this on Feb 15. So I did this for 2 days. So naked sell call, yeah, and received the $1. Yun, so receive that profit. And then Nvidia bear spread. This one is quite the same as this, no? So this is the 149. Same lang yan. That's why it's 89% the same. This one is Tesla bear spread. Yep. This one is expiring Feb. If I'm not mistaken, I think this is a Feb 17, or if not Feb 17, Feb 24. So yeah, this is quite yeah, actually for the Tesla bear spread, I'll be very honest. This is quite daring because obviously Tesla can move significantly way above every single day. So in the case of Tesla, so far we do see an extension, and it needs to have some decent pullbacks every time it actually trades above 200. We noticed that these late bulls are getting whipsawed. So in order to make money on that late bulls, no, you can see that here for Tesla, we think that any buyer between 195 till about above, even if it can go to 30, this is actually all the late comers. So all the late bulls in Tesla are getting clobbered by all these ipet bulls in the past. So you'll notice that Tesla had a supplier here at about 220 to 240, also here 220 to 240. So we can see that the 220 to 240s for Tesla is actually a significant resistance, Whereas, of course, these were the smart money buyers entering at about $100, 105, 110, 120, even as high as 130. So these were your smart bulls. These were your technically late bulls. So usually when you're late, you don't necessarily get paid, or if you get paid, it's very minimal upside. So maybe those buyers at 200 can still win if they sell 220 or 230s. But definitely, it's very clear that there are some resistances here in Tesla in the short term. We're talking about, like, say, 1 week, 2 weeks. It has to consolidate, find the new base. Maybe the base is better off here at 160s or 150s. So it's very clear that you can take advantage of these bear spreads. So we did a lot. So for April, several ways to actually take advantage for Tesla bears. I did the Tesla bear spread. This one is more near term. So this one is 215, 220. That's quite aggressive on my end. But if you're looking more for a more conservative way, then it would be about 250 bears. This is an April 250 bears. I was able to get about $1.25 here. This is a naked sell call for Tesla, expiring on April. This one I received $10. This one I received $5. The only difference when you're making a naked sell call, guys, is that it takes a lot of your margin requirements, your buying power requirements, versus, say, a bear spread. So for instance, in a bear spread like this, Tesla, this would be just $500 times three. It would only take $15 from my buying power, versus this one, which would cost me $26,000. This one would cost me $30,000. So from a margin perspective, usually the reason why you see a lot of bear spreads here rather than naked sell calls is because naked sell calls are pretty expensive in terms of your puts, in terms of like buying power requirements. That's one of the reason why. Okay, wait up. Let me just open um, my lights. Okay, here, guys, we can see that the Netflix bear spreads. Yes, I created Netflix bears. You can see that I focused mostly on the big caps because really, when you're trading options, I think that the best way and the more predictable way is to trade the big caps. So we're talking about the Netflixes of the world, the Microsofts of the world, almost all the big tech. So you can see also that Netflix here has been consolidating with a $380 high spike recently. So you can clearly see that what I've been just doing is pretty simple. You see the high $380, and you see the recent levels of resistance is also at about 400. So definitely, like, you can just create those bears, like Netflix 380 bears. I could have made a Netflix bear spread for February 24, and I'm gonna show to you that. Okay, let's see if I want to make a Netflix 380 bear, knowing that 380 has been quite a significant resistance. Do I receive any credit? So let's take a look at the 380s here. 380s is just receiving 60 cents. So that's pretty low. You can see that 60 minus 45, that's just 16 cents versus the $5. So it doesn't meet our requirement of at least $1.50. So it's too late to make a Feb 24. So if it's too late to make a Feb 24, check a farther expiry. You can see that I was able to get a good expiry date at March. So I got $150 using March. So you really have to prioritize, guys, the credits that you receive. You'll notice that for almost all the $5 spreads, I usually take 30%. This one is a little of an exception because this one, I think I only did this for a 9-day expiry, right? And if you'll notice, I have a strike that is significantly high. My Nvidia strike here is 240 versus the Nvidia strike here of 230. So if you choose a 230 strike, obviously this is less, this is riskier rather than 240s, right? So, and you'll notice that for Microsoft, recent high of Microsoft was also 275. So that's really how you choose your strikes, guys. Try to find either the high of the week or high of the range. So it's very clear here that Microsoft's high is about 276. So you got that 275 to 280 range. You could have used 290 strikes. That would also have been okay. And yeah, you could still actually make some Microsoft 290 bears. And this is how you just do it, guys. You just go click Microsoft. As you can see, this is the WeBull platform. We are advocating to use WeBull in your options trades. Webull is available for Filipinos, Singaporeans. If you're an American watching now, you can open a Webull account and you can basically use this. And they have a promotion. Just wanted to share that their recent promotion is if you open an account with Webull from February 15 till March 1, you get up to as much as $500 by funding any amount. But if you fund any amount, you could get about $10 to $100 of fractional shares. It could be Apple or Google or whatsoever. And then you've got the chance to get $10 to $100 of fractional shares if you maintain your funds for 30 days. Yeah, and you fund any amount, you get 5 free shares, either Tesla, Apple. Most likely, well, for the $500, it's obviously not gonna be for everyone. It's gonna be a lucky draw. So some people will receive $500, some maybe $100, etc. I think I received something like $100 when I deposited a $2,000 account on Webull. So not so bad. And the reason why I like Webull is that you can enjoy zero commission trading, and you've got rewards every now and then. So here, they've got these zero commission on stocks and option trading, free data for indices, and then you can open it for your mutual funds in case you're just looking to just buy and hold and park some mutual funds. Let's say you're just buying the SPY, that would be, or the VU. Well, VU is equivalent to basically the SPY. Okay, so yeah. I digress. Okay, there's a question. What is your DTE in choosing your options trade? So I did say that I prefer, usually when I'm making bear spreads, I usually choose a 45 DTE above. So we're talking about 6 weeks, 8 weeks. But also, I've seen that the Vega or the volatility is pretty high recently, such that I can also create 2 week expiry, 1 week to 2 week expiry, and also create credit spreads and receive the money immediately. So you'll notice that this one as was actually, I can receive that already, 99% credit spread received, 100% credit spread received, this one. So obviously the shorter dated is already, kumbaga harvest time na yan, no? Harvest na to. Harvest na to. For this one, April, matagal pa yan. So I'd have to wait for about 6 to 8 weeks pa to eh. So either usually, if it's a longer dated expiry, I also do that for conservative reasons. My profit target is about 50%. So hindi ko yan hintayin mag-100. Let's say in a month, I hold this Nvidia bear. So right now it's Feb 17. Let's say today is March 17. Assuming that Nvidia stays below 260 and never really breaks above that, I do expect that there will be a theta decay already, given that from 2 months, I've already held it for a month, and as you know, time decay is your friend if you are a seller. So you would already receive something like $50 per contract from here, because from 105, this would decay to about 50 cents. So you would receive a $50 already. I would receive that per contract to. So if I have like 5 contracts, I'd receive $250 and so on. Yun. Yeah. So for the question of what strikes, what date to expiry I use, I use a lot. I use 2 weeks or 8 weeks, 2 weeks, 6 weeks, 8 weeks. Sometimes just 1 week. Sometimes I do some naked sell calls lasting 2 days or 3 days, but very very little, very very little when it comes to naked sell calls, because it really takes a lot of my buying power. So I really prefer making bear spreads, to be fair, because it's just what, $500 per contract. So mas madali talaga just to make a bear spread rather than naked sell calls. So this is a naked sell call, medyo mahal to. This is a naked sell call, medyo mahal to. Okay. Yeah. So this was the action last night. Very huge drop at the ending. A few events that we may actually take advantage of. So you can see that the fade away on Nvidia and Microsoft hype. So we can still take advantage of selling Microsoft bear spreads. If if a chance occurs, then you can see that Etsy also dropping from 140s towards 130s after a Citron research report about dirty secrets of Etsy, one of the largest counterfeit platforms supposedly in the world. I don't know if that's real or not, but definitely I know that this is a market moving event that we can take advantage of. So how do we actually make use of these types of news, guys? So seeing this Etsy move, let me show to you guys a few things. So here, very clearly, if there is a bearish direction or mild or really huge bear for Etsy, you can see that here you can see that Etsy so far the peak was about $150. So let's assume that this $150 is going to be the resistance for the next 2 months and 2 weeks. How do we actually enable that? Just go to your options. So 2 weeks would be 14 days. That means that the 150 sell calls would be our preferred entry. So sell 150 and buy 155. Unfortunately, as you can see, this is just 40 cents. So we won't take this trade because it is less than the $1.50 requirement that we want for our trade. So March 3 is too small. We can't do that. How about for say 60 days? Let's take a look at the April now. Let's take a look at the 150 here. 150, 155 is also just giving you 80 cents. So it doesn't pass our minimum credit received. So we will just basically wait for Etsy to give a rally or something if we can make a trade. No, so we won't force it. That's what I'm saying. Yeah, so sometimes, also let's discuss the market conditions. The other day, which was February 15, the market was actually very happy. You'll notice that the trade desk went up 30%, Beyond Meat, QuantumScape, Magnite, all of these some were related to earnings. Some, they were just rallying off of the sentiment of people. And then I also tweeted that the last time I saw pumps like these was actually during August 2022, when the likes of BBBY would just shoot the daylights from $5 to $30. Let me just show to you that exact chart. Bed Bath and Beyond was one of the most hyped names of 2022. From about $5 here, you can see that from $5 here, it went to as high as $30 in just a matter of, I think it went up something like less than 20 days. Yeah. So this was like July 28 until August 18. So that was really some of the craziest pumps that happened in the market. But recently, it's been happening also in plenty of names today in the small caps arena. So that's why I've been warning people that these 30% spikes on Silvergate, Upstart, of course, Roblox, that's an exception because Roblox actually had very good numbers. Roku actually had good numbers. So, for the names that had good numbers, we won't really say no to them. Say Airbnb had good numbers, except to just illustrate that even if there's good earnings, you have to watch out if there are also some selling pressure. So example for Airbnb, we expect that okay, it could rally 160, could even just stop here at 140s. Why? Because yes, this is a significant breakout after good earnings and very good data from Airbnb. So normally I wouldn't really short the likes of Airbnb, and I would just watch how it moves first. But it's very clear to me that this one is your next boss levels for Airbnb. So somewhere at about 160s or 170s, I will watch out on whether there are chances to essentially create bearish spreads here. So I'll just wait because Airbnb is still not a trade to be made. But you can see that the recent moves have been quite hyperbolic, parabolic for some names here, which eventually, if you'll notice, we said actually in August 17, don't drink the Kool-Aid. The same movements we saw Fubo before rally 45% a day. You can see 100% move in a day. This is a daily chart, guys, from $4 to $8 and then close at 6. BBBY went from 15 to 30, then close to $20. Apron Kitchen went from 4 to 6, then close at 5. So guys, and then of course if you check them out afterwards, they all fell like 50-90% afterwards. So very careful, because notice on Wednesday all of your blockchain names was highly shorted and definitely got what a pump, right? So Silvergate went up 28%, Argo Blockchain 20%, Mara went 20%, Coinbase went 17%, MicroStrategy hit $300, 10% up. And then the next day, the day after, notice, kaboom, all of them were just getting rug pulled. Shopify actually was a earnings related play. Sam, aka Boston Beer, was an earnings related play. But you can see like Upstart, Silvergate, Coinbase, they basically threw up all of their gains and then lost money. So, and that's just like 24 hours later. This was exactly what happened on Thursday. Basically, a rug pull on crypto, a rug pull on a lot of names. Shopify had done badly on their guidance. Datadog also bad guidance. Yeah, so here's a few things to watch out for in this market. You can see very strong sell-offs happening on Upwork, Datadog. These are actually some names that we can actually take advantage of, twofold if it's actually already at extension, but if it's not extension, then we can't. So actually I checked Datadog. Unfortunately, that's not extended enough, so I wouldn't actually short it yet. um Let me check on Upwork. I haven't checked on some of these names for a long time. So usually, guys, in a very definite downtrend like this, there is a very strong support before at 15, which became a clear resistance here. So you can see that it's still very much in a low end. So I wouldn't really choose to short these names. Why? Because it's like 95% down or something. So I usually tell most of the members that we don't really touch names that are down 80, 90%. Obviously, the people who bought it at 50 or 60, they could be deploying money here at about $10 or $8 or $12. So we don't know how many people would average down and then pump it up. So I usually, guys, would not focus on these small caps except just to show it as a guideline that the most beaten down stocks, they're not necessarily growth stocks. Some of them are zombies, some of them are SPACs, some of them are growth stocks that aren't growing anymore. Some of them are unprofitable names. Usually, I would not dare to touch them unless I have a very high conviction that they are reversing. So the recent news on Airbnb can actually mean a reversal for the company, but I may not necessarily buy Airbnb at 140s. It's pretty expensive. The good news is priced in. I could perhaps wait it out at 85 and $90 yet again if an entry comes. But if it doesn't, then no worries. There's a lot of stocks in the world. And then of course you can see that, so these are some of the news that you have to be at least aware of, like at least know the headlines. Datadog, bad numbers. DocuSign still have to cut jobs. Dow saying that the Fed members are looking at large hikes, not off the table. Twilio had an impressive guide. Renaissance in China. This is a Chinese investment banker. Shares are plunging 30%, as much as 50% in a single day after their chairman was unreachable. Nobody knows where the chairman is. He's missing. There's the Citron research with Etsy shares now sliding. Then you've got some JP Morgan executives getting Epstein lawsuits found in their email. Then you can see how Wall Street is fueling a downturn because of rate hike worries. We'll know earnings from Walmart today as well, just to check on retail. But so far, it has been a non well, I'm not here to predict what's going to be the numbers of Walmart. I prefer not to predict. I would just react on it. But from Walmart's results, well, I can always say to you that here at about 150s, there's a lot of selling pressure from the Walton family itself. There's been an insider selling. You can see quite a huge sell-offs here. So if I'm gonna be betting on Walmart, I'll be betting on 155 bears here or 160 bears here. So two ways you could do a bearish put at 150s, or you can just make a bear spread. But I would, yeah, but I'm pretty I'm pretty more confident on the bear spreads. Actually, let me take a look if Walmart 155 bears are good. Let me see if the yields are high enough. So the 155 bears, wala, it's too small. I wouldn't take this. This is too small. You're just getting like something like 80 cents. I need it to be $1.50 before I will touch it. Wala, this is too small, too low yield, no care. I wouldn't care. So it doesn't pass our criteria of high yields. So no, we won't really do anything there. Stocks with the most active options trading by bar chart. This is quite a wonderful data, I think. So you can see that everyone's trading Tesla, Apple, Amazon, Nvidia. A lot of people are trading AMC, Google, Meta, Shopify, AMD, Mara, Microsoft, Roku, Coinbase, Google, Palantir, Cisco. So in general, I would also still focus on the big guns. So I would prefer actually trading the Teslas, the Apples, Nvidias, Microsofts. Yeah, actually. So and recently there's actually some setups happening on your Amazon. Actually, Amazon 110 bears could be taken advantage of, given that there's been real weakness in Amazon's numbers. Let me show to you a few ideas to make here. So obviously this was an abandoned baby for Amazon. So you can clearly see that there is a huge bearish chart to be made, bearish spreads to be made on Amazon. Very easy to calculate if you have a yield. Just click Amazon in your WeBull account. This is how the desktop platform of WeBull is. Go ahead and check the 14 days, or maybe check 7 days. Let's see. 105 bear calls. Let's take a look if we can get some yields here. 105, no, it's too little. This is 28 cents, so automatic no. Find something in the 40 days area. Let's take a look at that. 105 bears. This one is still not enough because $2.30 minus 149. It's $1, but try to get it about 1.5 if you can. So you just post it. So 105, 110. Make a bear spread on Amazon. Take 1.5 at the very least. If you can get higher, then even better. So I think that's better. Like March 31, or try checking the April 21 if you can get a higher yield. 105, 3.4. It's about $1. Yeah, both April 21 and March 24, you could do both March 31 or April 21, but just try to bid for negative 1.5 to negative 2. So, of course, higher yield, the better. What else? Just wanted to share obviously a few things that are in my radar. E-commerce year to date, we can see that so far year to date, Wayfair had rallied quite significantly. Obviously, Wayfair is also a meme stock being played around. So this is something to look at for those people looking for bearish puts or bearish spreads. Mercado Libre rallied. Mercado Libre actually did well on their earnings, but the sector could have a hard time. So Wayfair, Mercado Libre, Shopify, we could actually watch for potential breakdowns that are happening. You can see very strong daily candles on the red side. Don't touch the names on SE yet. You cannot short it yet because what if the numbers are good? I prefer not to predict what's going to happen on C Limited's earnings. I would only wait after the numbers come out. So for a trade in the e-commerce, you actually have about three setups to make. Shopify, you can clearly see 55 is currently the peak. So there's definitely a lot of things to do for Shopify. If you believe that peak of Shopify is 55 in the short term, you can check out already the Aprils and the March. No, so 55's 50 shorts, so 50 bears, so 238, 128. This is good enough. No, so sell a 50, 55 bear spread for April. Um, Usually nowadays, because I'm prioritizing taking credit, even if it's 60 days, I would be okay with that. Because if I'm choosing something like 7 days, you can see that the Shopify 50 bears, you don't really get a lot. Like what, 95% down already last night. So obviously it went quick, fast data decay last night. That's why if you see a chart already on the downturn, if you want to make credit spreads, you cannot actually do anything in the short dated. You have to go somewhere long dated. So I hope that answers the question on what types of DTE do you use. It's all a matter of yields. You don't want to take a DTE here if your yields are too pathetic, right? So that's really the answer. Okay, so Etsy, we can see quite bearish puts here. Can make a lot of puts on the 140s, 150 bears. We can actually also make a, if you want to make a really huge direction bet on Etsy, there's ways to do so. So for Etsy, you can actually make some bearish puts. So the at the money puts, let's say you create a 45 or sabihin na natin March 31, 42 days. So an at the money put for Etsy would cost somewhere at 11, 11. Then let's say you predict it's gonna go 110. So 11 minus 3, you're gonna pay something like 8 or 7. So 7 pay, and then you make a reward of about 14 if you're right. So it's a 1:2 risk reward. I would prefer 5:15. So what I would do is I'll try to make a bear put on Etsy, but not necessarily execute it today. Anyway, it's still March. You can do it for March, or you can just choose April. But usually nowadays, I'll be very honest, I haven't been making bearish puts yet, for the primary reason that the market has been sleeping and just chopping and chopping. Actually, it's very important to see how the market makers will close the indices tonight and for next week, which is end of the month expiry. I think that if the bears can control 4,000 for good, then we can now initiate bear puts for many names like Wayfair, Shopify, Etsy, Mercado Libre. This is also a good bearish put to make, but or bearish spreads. But yeah, so I'm these are in my watch list to be on my bearish positions. So for the fast foods, you can see that a lot of names have rallied this year, and they're not necessarily the best fundamentals either. You can see Dutch Bros, Beyond Meat, Red Robin Gourmet. So yeah, so Red Robin Gourmet, the only reason why I don't want to short this is because it's already gone down significantly low. So I really don't like shorting small caps. So I'll just use this as an indicator. If I see it getting sold off, then it means that the SPY bears would work well, the QQQ bears will work well, Netflix bears would do well. This is all only guidelines for me. I want to see these names getting rejected at certain price resistance levels. You can see resistance here at 45 for Dutch Bros, perhaps a resistance here at about 185s for Wingstop. And you can see that two-sock fishbowl, that very long wick here. This is that resistance area, 180s for Wingstop. Celsius Holdings, we can clearly see here a strong distribution at about 120s and 100. So any rallies back towards 110, Celsius would be a good short. Starbucks, we can see some hesitation here at about 110 to 120. So I'm looking to see if we can make some bear spreads here in Starbucks. Maybe April. Usually I'm looking April. This one is just earnings related. I'm trying to see if there will be a turnaround. But obviously, Hasbro has fallen to the downside, in fact, hitting near lows of the pandemic. We'll see if there are some bargain hunting buyers here at 40s or 50s. Not looking to buy. It's just something that I'm on watch list right now. Yeah, there is a question here. Any options trade for the dollar now that it's going up short term? Yeah, so actually we are very bullish on the dollar. That is UUP and DXY. So there's several ways to make money on the dollar. We're bullish the dollar, so clearly here at 27, it's 28. There's several ways to make money here. You can sell bullish put spreads here. So obviously here you just click UUP, dollar up. Since we're bullish, there's several ways we can make money on selling credit on the downside. So basically, we're gonna sell puts on all of the 27 below. So here, let me show it to you. So the sell puts at about 27. As you can see, it's very minimal yield. So you don't want to sell puts when the yields are too low. So instead of making a yield play, you can actually make a bullish call spread for UUP. So the bullish call spread would then be you buy 28 calls, which is going to cost 69 cents. And then you assume that it hits 30. So 69 minus 6 cents, you're just going to pay something like $60. for a potential win of about $140. So that's April 21, 2023. It's a bull call. So that means buy 28 call and then sell the 30 calls. Or if you want, sell 31 calls. Yeah. Or you don't want to make sell calls, it's fine. You can just make a buy call. You can try to create 60 cents. It looks like 50 cents, $50 if you can, $50 contract. Another way to actually also take advantage of the strong dollar is to obviously short the EEMs or the emerging markets, because usually when the dollar is strong, emerging markets tend to actually behave to the downside. So we are actually shorting emerging markets. So here we actually started shorting since February 2. We think that this 42 would hit 39 or 38 or a 10% drop. So that means that about within next March or April or May, we can see that it can fall somewhere here. So the natural trajectory to make a trade for the EEMs is very simple. It's so since you are directionally bearish, obviously directional bearish would take you about 2 weeks. Actually, not 2 weeks. It's going to take you about 2 months, 1.5 months maybe. So you have to choose somewhere here, about 40 days to 60 days. So you're choosing on expiry dapat March 31 or April 21. So just to be clear, let's say I use April 21. So for EM, it's quite simple. You have a 42 put, and then you're gonna sell put at 38. So it's $4.50 minus 46 cents. So you're gonna cost, it's gonna cut about so ito kasi medyo mahal yan, no? $4 yung bayad mo on a 42 put strike. So baka gawin mo is 40. So $1 minus mahal tong 42 puts. So gawin mo dito sa mga $1. You can buy a 40 put. Mahal pa nga tong $1. So try mo a little bit less than $1. And then your target, let's say, is 38. So $1 minus 50 cents, it's going to cost you about 40 to 50 cents. Yan. So it's going to be buy 40 puts and sell 38 puts. At the money put ka bibili, tapos sell puts at your target price na pabagsak, and then get about 63 days of duration for your trade to make money. Because that is a directional bearish call for emerging markets, you have to take a look, since EEM is mostly China. We're also bearish on China. An EEM put is similar to a short in China, no? So parehas yung galaw niyan. When you are bullish the dollar, you're essentially shorting emerging markets. You're essentially shorting Philippines, Malaysia, India, Vietnam, China, Thailand, Singapore, basically all these emerging markets, Southeast Asian countries. So the best way that I see for us to make money there is a short on China. So we have a short on China. We've done it through Yang. You can see that we've been bullishly buying Yang at $7.40. It's now 9.20s. We think that this goes towards 12. So here, very simple lang yan. You can, of course, just buy the Yang shares, or up 970 na later. Kasi bumagsak na naman yung China kanina eh. So actually, that's one of our best trades made, shorting Chinese shares at the peak. Hang Seng Index continues to fall down to the downside. Bang, bang, bang. We're expecting it to hit 19,000 somewhere March or April or May. So, hinihintay ko pa yan bumagsak. Puro sell-offs yan. Everyday sell-off yan sa China, sa Hong Kong. Sell, sell, sell. Look at those candles. Walang kahirap-hirap. Very clear sell-off on China. By the way, because it's a very clear sell-off in China, you have a very clear short to make on Chinese issues. JD, Alibaba, Pintuatuo. So take a look at these three. For Alibaba, we actually made a bear spread here at 115, 120. Any rallies on Alibaba at 115s would be a good entry to short. So ito, short area yan si Alibaba. Very clear yan. This is a very good bear spread to make. 115 bears. JD, here at about $60 above. That's a very good short to make. Let me show that to you. Yeah, $60. Very clear shorts yun eh. Ito. 60 bears for JD. Pintuatuo, I've made a bearish play at 100. Pintuoto, ayaw pa bumagsak, but you can still make this. Kaya nga maganda, you can still create 100 bears for Pintuoto. This is a bear spread to be made, 100 or 105. Um, yeah. Mm, of course, recently, my ChatGPT hyped si China with their own version of Google and their own version of Baidu. So Baidu is actually an interesting chart to short. 160 bears or 155 bears. Interesting area to short here. You can see a very strong resistance here. Yeah. Actually, yan yung mga ginagawa kong bear spreads. I do have a Baidu bear expiring on, pinalit ko lang yung expiry ko sa April. Pero pwede naman if you want March, pero taasan mo lang yung strike, gawin mong 160 bears. Yeah. So it's been an hour. For those who are asking the recap of our Feb 3 results, here's the recap for that. Let's go fast here. Just fast recaps. What happened to our trades? Review of option trades. I made the recap with the members actually sa group nung Feb 13. I'm just gonna share to you guys. So nung Feb 3, expired Feb 10, as you can see, all of our bear spreads made money. QQQ bears below 310, so panalo. SPY bears below 420, panalo. Microsoft traded below 265, another win. Apple traded below 155, another win. For Nvidia, actually it traded below 220, pero because Nvidia was quite volatile, I closed this at 90%. Hindi ko na yan hinintay for a 100% win. I'm not sure if I shared this on the live, but in our awesome10x.com, for the daily members who wants to learn more, you can sign up awesome10x.com. We will teach you how to manage the sell credit spreads, beginners. You can start with your paper trade first, to understand. You can see that since December, pasok na kami on the buying of bullish puts on ARC, Palantir. You can see that all of these made money, by the way. ARC is now currently $40. So, syempre, because this was February 2023, obviously, panalo yan kasi 29 strike. If ARC is above 29, this one is a 100% win. If Palantir is above 6, this is a 100% win. Obviously, Palantir is now 9 or 10. Square is now $80, so this was also 100% win. The January SPY 360s, this was a correct win, but the 400s was a loss here. But Iron Condor yan, so minimal loss to. But the bullish puts were all a win. SPY bull puts here, Amazon bull puts here. So it's all, so of course you can make money on two sides, bullish put spreads or bearish put spreads, but definitely you have to make those trades when the market hasn't fully played it out. So actually, this one, we made it around December. So panalo yung mga yan. We made Tesla bullish puts. We won that. That has probability. This one, I believe I shared it to the Awesome 10X free classes. Explain options like I'm 5. Go back to this if you want to learn more on credit spreads. December 23, we shared all of these. So around December, you could really make a lot of money shorting. So these were all the bearish spreads. As you can see, this was a directional play. Because during December 20s, very strong yung bearish control. At least for the first December 13, 14 until about 28, mga 22 to 28. So there's like 2 weeks of very strong bearish control. If you have a very strong bearish control, you can make a lot of money na gawin mo lang ng 1 month expiry dates on your DTEs. So yan, these were actually directional bearish puts. So yan yun. We shorted McDonald's, Berkshire, Financials, QSR, Starbucks, yan. McDonald's, Hilton, yan. Then some bear spreads, yan. Yeah. Obviously ngayon, yung mga talo, clinose ko rin yan. Tapos itong bull spread na to, in hindsight, you can see naman, no, noong February, I was betting na Tesla's gonna go up above 115. If I held on to this, syempre 100% win to because Tesla's now trading at $200, obviously above 115. So the point of the lesson or the spreads here is that respect your expiry dates. Respect your expiry dates. Ito, syempre, itong bear call na to, talo to. Kasi Crocs is what, $150? Very strong earnings si Crocs eh. Buti ka mo, clinose ko yun. Clinose ko yun eh. Pinatalo ko yun kaagad. At 120s pa lang, nagpatalo na ako eh. Dito pa lang yun eh, sa 120s. Kinot ko na yan. Pero wow Crocs had a good earnings pero tinusok pala. Okay, that's an interesting thing. It means that the market is really selling all the high flyers, just like what happened with Enphase. Good earnings, but it got sold off. So that's interesting. I want to see these types of moves on companies that had good earnings but then gets sold off. So example, if Roblox gets sold off at 55 or $60, I'll be interested to short it somewhere here at 60. So we'll see kasi kahapon gap up ng malaki and good earnings on Roblox. So we'll see how the setup will be. Will there be a resistance play here on Roblox at 60s or 70s pa or 80s pa? There's really a lot of available trades, to be honest. And so just yeah, a winning system isn't about cutting losses. It's also ensuring that you have winners powerful enough to cover up your loss. For credits, I usually take profit 60% above, except for short-dated expiry. If it's a short-dated expiry, like 2 weeks or less than a week, I will hold it until 100% or 90%. For debits, honestly, right now, wala akong masyadong ginagawang debits. I'm not making directional plays right now because the market's choppy. If the market is choppy, you don't want to make any debit spreads, no matter how cheap they are, because you'll be losing on the theta decay. When I say choppy, the market isn't going anywhere. It's like 400, 420, diba? It's like ping pong. Unless today we really make a breakdown on 400, then we can make some debits. Or if we really break above 420, then make debit balls if you have to. So yun, so it's very important that you understand when to make your bearish puts and when not to make it. So obviously ito, tinik profit lahat yan. Before the market ended the year last year, the bear puts, a lot of the stocks was very bad 2022. So all the bear puts obviously made a lot of money. Lahat yan tigbe-bear spread, man notice mo. Actually, all of these are shorts. So yan, panalo lahat ng shorts na yan. Yan. And you'll notice that all our shorts made money. And actually, nung nagbo-bullish spread kami, because we started seeing bullish signs already on Amazon, on Square, on a few names, started seeing it. So we implemented it. It would only be 100% correct if you held it until February 23 because we're Square today. Square is $80. So you have to understand that right now, obviously, the bulls are like parang saying all the things na malakas daw sila. Also, by the way, for those who are trading options, understand the power of options. I always said that the nice thing about options is yung mga ganyan, $500 lang yan, $500 lang yan. So kahit na sobrang dami kang, even if you're seeing a lot of positions there, the truth of the matter is that if you take a look at the contract size, if it's just $1, one contract, tig pa 500 lang yan. So you could be having 10 contracts, 500 times 10, $5,000. If it's a $100,000 account, then technically 95% idle cash. So yun, that's why actually I showed na malaki yung buying power because a lot of these bear spreads or bullish spreads, they take a little dollar amount lang. So yun. Nowadays, yes, we are shorting some Tesla 220 credit spreads. The review of trading ideas. So far, most of our directional bearish puts have made money in December 13-14. So that was the CPI day. We got to close the positions with profits within 1 to 2 weeks. Around December 22 to 29, we closed our bearish positions. And then the non-directional bearish credit spreads, they all made money in Feb 10. We initiated that on Feb 3. This was the Take Candies from Babies episode. We made some directional bullish put spreads, but this one was vindicated and made money January and February. So this was actually created around December 21 and 22, 2022. So these were the Palantir bullish puts, Square bullish puts, ARC bullish puts, Tesla bullish puts. So that is also a proof that a lot of things can happen within 45 days. So right now, maybe the bulls are partying, but in the next 45 days, they might all actually lose money. So watch out for those bulls out there. You might get a rug pull, and we are seeing the dollar rising, gold is falling. A lot of the data is favoring the bears. So even if my execution right now is mild bear, as I said, the moment I see the 4,000 spy breakdown, I'm gonna have a lot of directional bearish puts on killing the Wayfairs of the world, the Shopify's, the Mercado Libres. Watch out because there's definitely a lot of stocks to kill in the US. Amazon's, Netflix's, etc. So yeah, so most especially, of course, we can see that we've made a lot of money to buy Tesla. We made a lot of reiterate buy on Tesla, especially in January 6 to 13. We kept on buying Tesla 100 to 120. Initially, we were trying to short China in December. Obviously, we were initially early there, but we closed these positions very fast, so that didn't really kill us. We did short China again on Jan 30 and Feb 7. This was the New Year curse indicator, and so far it has been making money for us. We are continuing to short China, and so far that's been correct. So far, we are wrong on our commodity longs. We tried to be directionally bullish on commodity stocks like copper, like gold. But when we saw the dollar was very strong, we exited all of those commodity longs very, very fast, took a loss fast. I'm not sure if the financial bears or the directional bearish play for the Goldman Sachs is correct. So far we're still wrong, or rather, we're not yet vindicated there. So, but I'm looking to see if maybe Goldman Sachs is a short. I'm not sure if it's going to be a short because their investment banking division is basically having problems. So I'm not sure if this is a bear play on Goldman Sachs. I'll watch. I'll watch. So, medyo neutral muna. But if this one breaks down, we'll start to short the banks. Um, yeah. Mhm. So the problem so far is that commodity longs have slept. They didn't really violate the stops, but they haven't really risen a lot. Neither the financials. So for the commodities and the financials, I'd have to watch. I'm still on the watch mode for that. So yun, it's already 7 p.m. Thanks for watching, guys. It's been more than an hour. I'm really thankful for everyone who's watching the trades, listening to the classes, and hopefully we help you get some alpha for your positions. We understand that options and selling credits might not sound easy at first. Initially, I was also getting an inconsistent system before. No, it takes time. I used to be buying out of the money calls, out of the money puts, and obviously that doesn't do well. The system is really 80% rigged to the seller, guys, not to the buyer. So if you want to be a winner, try to sell credit spreads. Now, of course, you can still win bearish directional plays if you want to do debit spreads, but you'd only win if the stock has a pure directional bearish move. Or if you want to make a bullish call spread, you have to make a really decisive, aggressive direction call that it's going to go up. Because if it's just consolidating, if it's just sleeping, all of your theta and vega will decay to zero. And it's in every single week that you are waiting for that stock to go up and it's just sleeping, you're losing money. So that's something that I want most people to understand and really understand. Because most people just think, oh, let me just buy a dollar bull call, or oh, maybe I'll just buy an EEM put. Buying would cost you a premium. If you're paying a high premium, even if it goes up, even if the dollar goes up, but if it does not go up significantly above your break even point, then you still won't make money, right? So be careful on buying calls or buying puts. We would prefer that you master selling credit spreads. Once you master selling credit spreads, I think that eventually, yes, you would still make those buy puts or buy calls, bearish puts, bullish calls. you will make those, but you only do it when you have a momentum in the market. Right now, the momentum to do long is late, so you can't actually do any longs. We made the longs December 29th, January 6th, for the Teslas of the world. You can't do it now. I'll be very fair. You can't buy Tesla now. As much as I love Tesla, at $200, you're late. You wait if you're late. For those who like to buy the Apples of the world or the Nvidias of the world, you're also late. So I would prefer that you're in cash rather than choosing to buy. The bullish calls have already played out very well. Finished na yon. Now it's actually choppy. You'll notice that everyone who's a late bull, they're just getting killed actually with the choppiness. Because since February, the market has gone nowhere. When the market is just sleeping, the bulls and the bears would lose their theta decays. Who's the winner? The seller. The seller of puts, the seller of calls. So, yun. Hope that helps. See you again next week for another awesome 10x class. Bye bye.